Our featured guest is John Lynch, the chief market analyst over at Evergreen Investments, and also our own Greg Miles joining us from the newsroom to talk about that latest on Conan O'Brien. We'll get to Greg in a moment, but John, I want to kick things off with you because I think last month you mentioned to Bloomberg News that investors kind of have to be ready to slip and slide here. What we're seeing today, some of that sliding?
It certainly characterizes a slide today with the 1% pullback or so. And I think that's something we just have to, there's been so much optimism built into the marketplace. The China building the reserve requirements are requiring that. Alcoa missing. I'm more concerned about Alcoa missing on the top line. I think that's something that's kind of been ignored because top line has really been the pressure that all investors have been feeling. We've seen the cost cutting working on the bottom line.
Right.
But I think the bigger story, the glamorous story today is the missing on the bottom line, but at the longer term secular story we have to pay attention to is the top line.
Well, we need to see the top line gain, economists are saying, before we can see companies start to hire. Obviously, they need sales to continue to pick up or to continue to pick up. Are you optimistic for sales this earnings season, even after the Alcoa story?
This earnings season, yes. We're still kind of counting on global stimulus, where I really, right around mid-year, I want to see the transition. We're counting on government spending, the weak currency to enable exports to expand. We really need to transition by mid-year from government and currency leadership to really try and transition to business investment, consumer leadership.
We need to. Are we going to get it, though, in your view? Because as we hear from a lot of guests.
I suspect we will, but that's part of the sliding, and I think today is an example.
It doesn't, we're going to talk about this later with Mark Zandi, and that it doesn't look good if you look at the household survey, down 2.2 million jobs the last 6 months. The non-farm payroll is down only 800,000, which doesn't look quite as bad. But what that points to is that small businesses are not hiring, and that's obviously been the problem. Small businesses aren't getting the money, and they're not hiring.
Exactly, and that the secular difficulty will, I think, come to fruition with that. But what we can't lose sight of, the next 2, maybe 3 quarters, we have 2/3 of the government stimulus kicking in.
So, John, you mentioned Alcoa, and you said that top line miss. I want to go back to it. You said that's more worrisome. What is it specifically you're concerned about, and that we might see maybe in other earnings reports in this quarter?
The secular issue, the longer-term top line. What's really driven this thing has been cost-cutting, productivity gains. Businesses aren't quite ready to hire people yet. So until we see top-line demand, and we're counting on, as I mentioned earlier, government spending and the weak dollar. So it's kind of disconcerting that we haven't seen the top line yet. Hopefully, as a lot of these government measures kick in, we'll be able to get the consumer more confident. We'll be able to find that floor in housing, that ceiling on the unemployment rate. Then businesses start investing again, and then I think you start to see the top line gains.
Today is done. Let's step back and take a bigger look at the year.
Slide is done.
You have some investment themes that you're looking at for 2010.
That's right.
Why don't you walk us through them?
Well, first and foremost, it's a technical market. It's a liquidity-driven market, so we need to appreciate that. And I think a major thing, as Ben just mentioned, how resistance can turn into support. I think last time I was on, we talked about 1120 being a big critical number, and we were able to get through that.
Right.
And now the next target looks like it's 1225, 1230. When you look at all the government stimulus, as I mentioned earlier, when you look at all that cash sitting on the sidelines still, I think we can nibble higher. But I'm glad to have a day like today. I'm glad that the VIX is north of 20. Absolutely. I mean, if we could go up every 6 days and down 1 day for the rest of the year, we'd be doing all right.
John, let me throw this out to you. Before Julie was kind of breaking down the gambling industry specifically, one player there. In terms of the states, we talked about Nevada, their unemployment rate, 11.8%. A reminder that there are some states who've got a much higher unemployment rate than the national rate, and that the state of the states is in a tough situation at this point.
That's right. They've been benefiting from transfer payments over the past year from the stimulus package. So the real issue will be what happens going from 2010 to 2011, and tax revenues are down, what, 7-8% on a year-over-year basis. So
is it potentially a crisis in your view? The state?
It's a major hurdle. I don't know. Hopefully, we'll be able to, get consumption and employment to a point where we can get revenues to where they need to be to at least function. Much like Julie said, we don't need to see revenues to exceed where they were in the last cycle for Las Vegas. But if we could just get something with the taut income statements, it could trickle down faster.
What do you need to see in general to get us past support from government spending to support from consumers? I mean, what pushes us over that hump?
Floor in housing prices, ceiling on the unemployment rate. If we can top out in the 10.2-ish range, and I hate to sound cavalier on the unemployment rate, but that sort of number, you get that ceiling and that floor, consumer becomes more confident that maybe they'll keep their job, they'll start to spend on some of those durable purchases that they've ignored for the last 2 or 3 years, then businesses will start to invest.
All right, John, thanks so much for joining us. John Lynch
My
there
pleasure.
from Evergreen Investments.